Hello and welcome to today's video on high altitude investing. In today's video, we are going to be talking about what the whales do not want you to know. So let's get right into this. As always, you guys, I jump into the total market cap first, which has seen another daily uptick candle. On the daily candlesticks, we see green going up further and closer to this resistance. So we're going to be watching for a rejection. If we get another rejection candle similar to the one that we saw right here, and even the ones that we saw right here, that would not look very good for the bulls. We want to see a lot more momentum and strength heading up to this resistance, and for volume to continue to increase. It would be really awesome if we get a spike in volume that is greater than this spike right here that caused this kind of sell-off candle that we saw. I'm going to continue to wait for a rejection candle before I finalize this black line here as resistance. I would like to note that if this starts to push up towards resistance and just pushes right past it, that will be very, very good for the cup and handle pattern that we've been watching since this resistance formed. And again, that would provide quite a bit of upside opportunity to pop up higher towards these levels. Whereas if this horizontal support level at 125 fails, or the horizontal one at 111 fails, we're going to see a drop further down. So not a lot has changed in the total market cap, you guys. A lot of times when I do these videos, sometimes I'm just updating on some of the same key factors that we previously looked at, but that's how we know that our analysis is sound. One more little pattern before we go here. There is the signs of a rising wedge pattern in the total market cap. So I am watching this resistance very closely, especially over the next couple days. You guys, just like Bitcoin and what I've been talking about in the previous episodes, we are getting to it a very important part in this kind of pattern to see what's going to happen next. Then again, if the resistance of this rising wedge is broken above, it will invalidate that pattern. So let's check out the top mover of the day. Click on our 24-hour change, which is QDM. Let's go ahead and check out the market cap. QDM went through a pretty long and intense correction, all the way down 98% from its peak, and a lot of rounded kind of structure with dead volume. We haven't had volume this big though since the top of its cycle in January of 2018. So it's good to see another volume spike coming in the $2 billion range, not quite $2 billion. Zooming in on the short term, we have the same Adam and Eve bottom pattern that's popping up in the whole market. So if this breaks above this horizontal resistance that it's kind of kissing right now, it dropped a little bit down. But on these daily candlesticks, if we can get above that horizontal resistance, I will expect more upside for this coin. And as you guys know, we can use a measured move on the Adam and Eve bottom by taking the low and the peak and then drawing a vertical line by holding shift from these 2 points and placing the bottom of that vertical line on the top. Now, if it breaks above this level, your first target is going to be about $4.60. And if we have a support failure, we're going to drop quite significantly as well. As far as the big picture market cycle goes, this would have been your impulsive waves on the upside, and this is your impulsive waves on the downside. So we could easily see another impulse heading up to some of these median resistance and support levels that it formed along the way down. So the Bitcoin whales do not want you to know these things about Bitcoin. First of all, the cyclical nature of Bitcoin and how every single market cycle it produces creates a large shakeout, and then it does an accumulation pattern to see further upside continuation. Bitcoin is no different than the stock market in the sense that it's seen continual crashes along its growth and since it was created, but always ends up recovering and shooting for new all-time highs. And each time it does one of these cycles, it has a history of dropping between 90 and 80% in market value. The other thing Bitcoin whales don't want you to realize is how liquid Bitcoin is becoming, with exchanges popping up all over the world where you can exchange fiat for Bitcoin and trade between multiple altcoins. In a sense, the Bitcoin whales love it when everybody's buying the hype and they love it when everybody's selling the fear. So what the entire market is experiencing right now is the biggest wallets, the biggest Bitcoin wallets in the world are actually increasing the amount of Bitcoins that they have, while a lot of the smaller players that don't have the ability to accumulate as easily are selling their Bitcoins to continue to survive. So this means that retail money is getting shaken out of the market, while institutional money and big players in the cryptocurrency industry are picking up lots of these coins, and Bitcoin included in that. You analyze different markets around the world, whether it's Bitcoin, stocks, or silver, you often find that they retrace down to these lower Fibonacci levels, and this is where the big whales and the banks and then smart money is going to be accumulating heavy amounts of Bitcoin and cryptocurrency in general because it's going to be significantly undervalued. The Bitcoin whales also do not care whether it breaks up or down from this price. If the support fails and it goes a little bit lower, down to the 2,000 range, then they're just going to pick up more coins and get ready for the next cycle. But if it breaks out right now, they're also going to get excited as more money piles in and get ready for a new local high to confirm that the downtrend is over. See, when you're playing with large amounts of money, the best thing to do is take very, very calculated choices in large time frames. And one of the easiest calculated choice you can make in a big time frame is to buy the lowest Fibonacci levels, and Bitcoin is between the 786 and the 88% Fibonacci levels. So the whales do not want you to think like a buyer in the big picture down here. They definitely would much rather have you be selling your crypto, and if it drops again, to sell more, because right now they're thinking about this huge cycle and how much it's went up since 2017 and then how much it went down through 2018, and they see that as a large opportunity to get in on cheap Bitcoins and cheap crypto. So do not be that guy that said, hey, I got into Bitcoin, but I was a little bit late to it and I sold when it was super, super cheap. And then you come back a few years down the road from now, you're watching this video or maybe one of my other videos and you're like, what? Bitcoin is above 20,000 per coin again. What did I do? I made a huge mistake. Do not be that guy. The whales also do not want you to know that the smaller time frames, such as the 15-minute and the 5-minute, are completely controlled by algorithms that are way smarter than you, including machine learning algorithms or artificial intelligence. And the probability of you making money in the 15-minute time frames or even smaller is very low, considering the whales have their bots trading consistently where they don't even have to look at it and it's making them money. So kind of to recap, make sure that you're not getting too fearful when everybody's fearful. That's what the whales want. Make sure that you're also avoiding smaller time frames, and remember the big picture market cycles of Bitcoin so you stay on the right side of the market. Today was a little bit shorter, but if we get some interesting movement tomorrow, I'll go ahead and do more of an extended update on the markets. I hope you guys enjoyed it. Make sure that you follow me on social media in the links in the description box below. I will see you guys in tomorrow's video, and as always, stay profitable out there.